Today we're kicking off with a series on CNBC Africa in 2013, Geared for Growth, to be featured every last Thursday of the month. And through that programming, we'll be exploring Namibia's growth story. That country's economy is set to grow by 4% in 2013. That's the slowest pace since the global financial crisis. Now, Leonard Kamwe, who is an independent economist, joins us for more. Good morning, Leonard. That 4% growth number may not have been as good as it was before. For us in South Africa, it looks pretty good because we've been stuttering around 2%, 1.7%. Those kinds of projections recently. And of course, Namibia is a small economy and there's some big areas which it has to depend on. For example, minerals and in particular diamonds. So take us through the prospects for growth in the minerals sector.
Well, thanks very much, David. A lot of opportunities are in there. Looking at diamond, for example, it struggled a little bit. One of the things I think which are critical, we have seen over the past 2 years or so, has been industrial action in that area, depressed production a little bit. Namibia is positioning itself more for marine mining. It's almost 70% now. It's coming from a 50-50 compared to land production. There's a couple of projects on the land side pushing new vessel coming on the marine side, and that's likely to push the numbers. I mean, you're not talking of huge numbers. It's about 1.4, 1.5 million carats potential over the coming 2 years.
Right, and of course, I always say that South Africa is a long way from everywhere in terms of many of its trading partners, and Namibia is a long way from everywhere and from South Africa. To what extent is that economy dependent on the South African economy still? There must be a lot of exports still coming to South Africa. What are they? And is that dependence going to stay? And in terms of growth of the Namibian economy, are they going to grow further without South Africa's involvement?
You have pretty much of both. I mean, let's start. I think Namibia is more dependent on South Africa on the import side. Everything we consume almost comes from South Africa. Even if it doesn't originally come from South Africa, it tends to be invoiced in rand, partly because of the CMA arrangement we have. That's one take. The exports to South Africa is mainly meat. But if you look at what we take from South Africa, we buy food, we buy cars, we buy clothing. All the major retailers in South Africa operate here. And so that's a kind of link. If you look on the financial side as well, except for one bank in Namibia, they are all South African banks operating here. So it's pretty much linked to South Africa. On the import side, you're looking at 70 to 80%. On the export side, close to 20%.
What about the infrastructure, Leonard? Of course, historically, when Namibia was known as Southwest Africa and it was regarded in effect as a fifth province of South Africa, the transport network reflected that. There is that rail line from Dar up through to Windhoek and further north and to the west. There's now talk about the Trans-Kalahari Highway, the rail and road infrastructure improvements, Botswana, Namibia, South Africa. To what extent is growth going to depend on that, or are the assumptions of growth for the moment assuming that growth without improved infrastructure and communication? Because as I say, you're a long way from everywhere.
Yes, that's very true. It talks about improving the Trans-Kalahari transport network has been there for the past 10 years, if I can remember. I'm not sure to what extent that is likely to be the driver of growth, but most likely the list of it. At the moment, we're still pretty much reliant on transport. I mean, on road transport. That's the key. If the railway line does come through, that is a big help to the economy. But that's more for the retail sector, mainly transporting goods and through that route.
What are the obstacles, apart from infrastructure, that would stand in the way of this growth? I mean, the sorts of things that we talk about in South Africa, what the interest rates are doing, what inflation is doing, what the currency is doing. These are all things that can affect economic growth. What is the picture there, beyond the things that are actually made or mined or farmed, to encourage that growth?
Labor or employment growth is a big factor in my opinion. In fact, if I look back 3 years when I looked at the growth accounting numbers, how much of our growth is due to labor growth and capital growth, it was only 1%. We have huge unemployment. At some point 2 years back, we were worried about unemployment sitting at 51%. That's a big challenge. We have seen growth of 5% or so, but that most of the time is jobless growth. There has been significant capacity, especially in the mining side. Whenever an opportunity in terms of prices comes, you tend to see production going up, but that's without really employing too many people from the ground. That's one challenge. And the bigger one. Secondly, I think there is a change of focus now as you look from the government. Namibia not only has high unemployment, but also has a very high skewed distribution of resources, a Gini coefficient of close to 60%, perhaps still one of the highest in the world. Government is trying to focus on sectors that are likely to improve the distribution of wealth in the country, and that may not result in growth quickly. And as much as government tries to push there, you may see a fiscal burnout, which is already a concern at the moment.